Okay, folks, we are live. Welcome to another Sunday Night Futures Live. Happy Mother's Day to those mothers out there. And to all of those who have mothers that are in heaven like mine, happy Mother's Day, Mom, and grandmothers as well. So we have the futures open. We'll go over them in a moment. We'll let them settle down before we start having a conversation about the opening price action here. We're going to go over a little bit about Bitcoin and how the elites out there, or as I like to call them, the parasites, are starting to freak out about their failed messaging and the fact that Bitcoin undermines their banking monopoly with the government. And we'll talk about the week that's going to be. We had a very, very quiet week last week in terms of economic data. The only one report that shook the markets up a little bit was initial jobless claims, which come out every week. Normally, they don't change all that much. They've been flatlined for a long time now. But last week, we saw a bit of a bump, and it's becoming a bit of a trend to the upside. So we're going to pay attention to that. The hookup in jobless claims relative to the Dow Jones Industrial Average. So a lot to go over here, and we're going to get started. We have a bunch of trades to go over. We have members chart requests to go over. For those that keep inquiring about membership, the issue with the membership software allowing for people to sign up, I'm not confident it's resolved yet. You could try, but I'm not confident it's resolved yet. So I'll know better tomorrow once Europe opens. My developers are over in Europe. Okay, so let's get to it. Let's talk about the opening futures action. They're trying to put something together here, but the E-minis, 5-minute chart, the E-minis are off the lows of the session. They're in a descending wedge formation. Now, this generally gets resolved to the upside, and I'll tell you what I mean about that descending wedge formation. This is only a 5-minute chart, so keep that in mind. It's not like it's an hourly chart or a 2-hour chart. It's a very short-term chart. Doesn't really mean much relative to where we're at time frame-wise relative to the open tomorrow. So here's your descending wedge formation. I suspect that we will break out. The question is, do we hold those gains going into the morning, if in fact I'm correct? Now, I want to also know if we break to new session lower lows. Let's take a look at the NQ, the NASDAQ 100. We're opening down at current. Another descending wedge formation. Again, only a 5-minute chart. Doesn't mean all that much. But it does look like upside momentum is beginning to build here. Let's set up an alert. Okay. I'm curious about the Dow. The Dow has been performing really, really well of late. And we're down again, along with the NQ. All the mega cap names are weak. Let's check out the small caps name. Small cap names. Small caps names. RTY. The RUT. That's down as well. So we have weakness across the board here in equities, but they're down fractionally. So not much to talk about. I will throw an addendum onto our observations here with seasonality. I'm going to go over seasonality for the coming week, and it's not all that bullish. So I'll put that out there as a teaser, and we'll go over that in a few minutes. So stick around. Let's say hello to folks. Let the equity market settle down here a little bit. See if any of those alerts fire off. Mike, hello to the terrific Bob. Well, thank you. Thank you very much. And group attendees, yo, all. Thank you, Mike. Bob and crew, let's get ready for another week or two. Absolutely. Hi, all. Had a great Mother's Day. Hope everyone did too. Happy Mother's Day, Jody. Glad you had a great day. You deserve it. Talon. Hey, it's going to be a very, very volatile week. Yeah, as a matter of fact, I forgot to bring up a chart of vol, and I want to go over that tonight. Volatility index. Larry, best copper play, BHP or Rio? I got stopped out of BHP. They should be rallying, but they have some sort of a takeover they're trying to do, a big one. So I think that's weighing on the stock. Now, I don't want to be pessimistic about it. It'll get resolved at some point in time in the future, and they'll play catch up. So we'll go over both. I haven't looked at Rio Tinto in years, probably since the China boom a number of years ago. Contrarians, few but proud. That's a t-shirt. Okay, I'm stealing that. Copyright protected now. All right, so we have NQ just broke to new session lower lows. So much for the descending wedge formation resolving itself to the upside. E-minis just also broke to new session lower lows. I always like to take a look. Once these alerts get taken out, I just like to see whether or not there's anything behind it. Do we have any type of volume? Do we have follow through to the downside? And you'll know pretty quickly because a lot of people set up their stops a little bit too tight sometimes. This is a 5-minute chart. 77% of this volume is selling. So now 85. Let's just take a moment here. Let's go to a 2-minute chart. I want to see how much is behind this. Volume's rising. Let's take a look at the E-minis. That alert also fired off. Okay. So at this type of price action, I would need to take a look at yields. Where are my yields? Yields are down. So you have equities weak with yields that are down. leads me to believe that they could turn this around pretty easily in equities. Let's check in with the US dollar. Let's go back to the 5-minute chart. Now, the dollar had a very strong week last week. It had broken down midweek, and then it recaptured support. So at current, the dollar it's showing is up at current, and that would be accurate. It is up. Let's take a look at the euro yen. I want to take a look at a weekly chart. We're opening down on the euro. Euro broke out last week. So what I suspect is going to happen with the euro is that we're going to do a retest this week of these support levels. In fact, I want to know about it. Okay. Let's check in with the yen. The yen is up. Wow, look at that. Now, this is a classic example. It's basically what I was looking what to occur on the euro. It already happened on the yen, meaning we broke out the week of the 29th. And I'll go over why this matters for equities in a moment. We broke out on the 29th above this resistance level here. We failed to hold that breakout point last week. That's a breakout point failure, a very, very bearish event. However, we're opening up. They're gapping it up above that upper band of resistance, which should now act as support. Now, if the yen manages to put in new weekly higher highs, that's probably going to be very, very bearish for the dollar because you have both the euro and the yen breaking out together. So our alert is set there. Now that we have a vibe for how the Forex market is looking, let's go back 5-minute chart. Let's take a look at some commodities, precious metal names. Let's bring up GC. That is gold spot. We're down about just shy of 1/3 of a percentage point at current. Silver, it's down over 1/3 of a percentage point. What a week last week for silver. Huge week. Sorry about that noise. PL, platinum. It had a really good week last week. Let's take a look at the weekly chart here. Really nice breakout last week. I think that platinum goes up higher. Palladium hasn't yet begun to rip, but the thing with palladium is this. Let's get rid of this. Go away. All right, let's just start scratch. Get rid of all of them. Clear. Bye. Okay, so here is our upper band of resistance. You could argue that we have a shorter term one here. And we put in a low back here the week of February the 12th. And I believe that we had taken out, what was the low this week? Low was 851.50. No, this was the low here. The week of 2.5. So they tried to take it down the week of 2.12, failed, reversal week, off to the races. So if you're looking to set up your VWAP or whatever you're looking for a data point at which to begin measuring the trend of palladium, it's right here. And bam, here's your high or low. Here is your secondary downtrend line. We'll make that a classy yellow. And here's your primary upper band of resistance up here. So this is setting up very, very nicely for a bull run. And at current, we're opening up 0.08%. So we like palladium quite a bit and platinum, in addition to gold and silver, but they've had a heck of a run. Let's stick with the weekly charts for a moment. Let's talk about energy, because energy matters. I just had it. I hate when I click on the wrong one. Light sweet crude. Okay, so energy is opening down at current by about a quarter percentage point. We had a doji star formation last week. So what I want to do here, because there are a lot of good names in the energy space that are setting up nicely. They've had nice, long consolidations. Oops, sorry, wrong one. And if you get oil that breaks out, well, all those names are tightly correlated with oil. So if you get a breakout in oil, those names that are in the energy space, well, then they will rally as well. Okay. Okay, that's set. So this doji star, meaning it's like a cross. It's a sign of indecision, a tug of war between bulls and bears. There's a good possibility of a trend reversal, the short-term trend being down over the past several weeks. And I suspect we may get a bid here to the upside. Maybe. We'll see. The markets are going to tell us. Taking a look at Nat Gas. I spoke about Nat Gas a couple of weeks ago. We were quite bullish on it. And man, what a rip. So what are we down at current? Yeah, we're down at current. I want to take a look at that chart closer up. We're down 1.24%, but we've had a nice little run here on Nat Gas. 5-minute chart. So they're beating it up. The thing to keep in mind here on natural gas is that if you take out a long-term chart, continuous contract of natural gas going back decades, we are just off of very, very strong support levels at which we've seen major bull runs, multi-year bull runs occur. So we're back down there again. So I think this is probably an opportunity to buy some nat gas. Let's go back to the weekly charts, take a look at agriculture, corn. The rally continues. Look at the volume last week. 88% of all volume last week were buyers. Soybeans. Similar story, but not quite as bullish. You had a very strong beginning of the week. However, there was selling midweek, taking it down off the lows of the week on volume, no less. You could see that they created this head and shoulders setup, left shoulder, head, right shoulder, and then we broke this neckline. And the rest is history. Let's take a look at wheat. Wheat, an amazing week last week. We were up on the week, big breakout on massive, massive volume, of which 95% were buyers. So very, very bullish stuff here in the agriculture space. We've been talking about this for a number of weeks, expecting it. We got it. Now, many of you may be asking, well, what about the DBA? What happened here? It's breaking down. How could this break down with wheat, corn, soybeans so weak? The reason is that cocoa prices, 8% of the DBA is cocoa prices. Cocoa prices have come off. I believe coffee prices have come off a little bit too. I haven't looked, but that's taking the froth off of the DBA. But last week we had an up week. I suspect that this is probably the bottom on the DBA, and there was really good volume last week. Really, really good volume. I think that's it for the futures. Oh, live cattle. Can't forget that. Never, ever. Now, I tried to short this last week on a bet that we would rally and retest the breakout point. I put my offer in a little bit too high, so they didn't take it. So I think cattle moves lower. Let's go back to comments, and we will then get to the charts. Flute brought to my attention a couple of days ago. It can eventually break out over the past gap high. Flute, we'll take a look at it. Sorry for the cough. Today was one of those days I just didn't want to get out of bed, which is rare. I always jump out of bed. Mr. Pete, welcome. Lexi, Val, SCCO. Yeah, all great. Those great names. All great names. NVIDIA. Yeah, NVIDIA is setting up nicely. Earnings, yeah, as you said, on the 22nd. So I own some NVIDIA. I'm not going to buy any more in advance of earnings. If they pull it back after earnings, I'll buy more. But I'm going to stay small. DG Burton. Hey, brother. Welcome to you. I see you have a new emoji. Okay. Is that the proper phrase, emoji, or is it, what should I be calling that? Oh, good. Thank you. Flute, with the chart we're going to go over in a little while. Earnings on May 14th. So just take note of that. Always important information. And I would encourage anybody, if you're going to request a symbol, if they have upcoming earnings, share that information, because I can talk bullish or bearish about something, and I'm not aware that it's got earnings coming up, and I don't want people to get hurt. It's the last thing I want. In fact, I encourage people not to buy a stock or short a stock in advance of earnings. If you're already long and you have a cushion, fine, not a problem. Yeah, I'm torn on this argument. You know, there's it's a good point you make. You know, oil was strong a few weeks ago. Then Biden came out and he started purchasing at $81 the barrel oil to refill the petroleum reserve. Then he stopped. And then he started, I believe, emptying the strategic petroleum reserve, adding pressure or supply to the markets. Is he still doing that? I don't know. But oddly enough, or not so oddly enough, that purchase at $81 the barrel, it was soon thereafter. That was the top in oil, short term anyway. And we're gonna be going over the chart in a moment. The packaging and container index, very interesting chart. Now, with oil down, I would have expected a bearish chart. It's not. It's very, very bullish. BABA earnings on May 14th. Thank you for that earnings date. Bottom play of daily chart. Yeah, the Chinese stocks, of which I always say they're uninvestable. If I trade them, it'll be with options. I want to know my downside risk right up front. I just think China is not an investable region of the planet. I've been saying that since COVID. I just don't believe it. And so far, I've been proven right. We've done very, very well avoiding China and being in an ETF for emerging markets ex-China. But China is now looking somewhat attractive. I have to admit, BABA, single-digit PE multiple relative to U.S. stocks, very favorable. Jack Ma's, he's been undisappeared. He's back now. I don't know. I'm not sure if he's back with the company, but apparently they've taken him off of the proverbial ice. Home Depot, yes, they're coming out this week. Walmart also, yeah, big week for retail. And I have a chart about retail and recession coming up in a few minutes. So stick around. Let's all get to it right now. Let's get done with the teasing and on with the pleasing. I just made that up. Let's get done with the teasing and on with the pleasing. Huh? That's a t-shirt. Probably not for trading, though. Okay, so I tried. Let's get to it. Where's my stuff? All right, let's begin with this monster of a human being. This is the Davos crowd. This is their chief parasite. I mean, probably one of the lowest forms of people on earth. His name is, I forget what his name is. It doesn't matter. He should be in prison. Let's play this. Let me make sure the volume is up. This is Klaus Schwab's right-hand man.
When I look at Bitcoin as a historian, I don't like it because this is a money built on distrust. The central idea of Bitcoin is basically electronic gold, that we don't trust the banks, the governments, so we don't want to give them the ability to create as much money as they like.
Let's pause there for a moment. The reason why he doesn't like Bitcoin is that it represents mistrust of government and the banking system. He doesn't like that because that's how he derives power. The last thing he wants is a currency unto itself, because that takes away from his power.
So we create this Bitcoin. It's a currency of distrust. I do think that the future belongs to electronic money.
Okay, let's pause there. You need to read between the lines. Let's play this. You may be saying to yourself, you know, he just said he's all about electronic money. He's all about that. That's not what he's saying. Let's listen to it again. Pause.
The future belongs to electronic money.
The future belongs to electronic money. That's central bank digital currencies. He wants tokenized dollars, tokenized euros, tokenized yen, so that way you and I can be controlled with the flick of a button. You jaywalk, you get a ticket, facial recognition, a fine comes right out of your bank account. That's control. That's what he loves. He doesn't like Bitcoin because he can't grab it. It's all about possession. You know, the ETFs are fine, but you don't have custodial ownership of it. You just have a claim to it. If you have a cold wallet and you own Bitcoin, well, then you have ownership of it. You are the custodian.
But what we've seen over the last centuries is that it's actually a good idea to give banks and governments the ability to create more and more money in order to build more trust. within society. So
what he just said was that the ability to give government and central banks the power to print money brings trust from the people. This is gaslighting 101. I mean, this guy's the biggest hustler in the world.
I'm not sure what money would look like in 20 years or 30 years, but I hope it will be a currency of greater trust and not a currency of distrust.
So we have a currency that's being printed and spent by a government that is sending it offshore, not investing it in the country. We have a currency that's being printed at an emergency rate due to COVID. Emergency spending powers have never been reversed. They've never brought spending back down to pre-COVID levels. It's only gone up. Yet, this monster wants you to have more trust in the central banks and in government. And he doesn't want you to have the ability to do what I'm doing right now. And what you're doing is having the conversation of as to why you're an idiot. You're an absolute idiot. You're a demon. And frankly, I hope to see this guy in jail one day. Klaus right-hand man forgot his eye patch. Makes me want to buy Bitcoin. Absolutely. NVIDIA, you've been hearing from analysts that their earnings announcement bar is very high. Of course. So NVIDIA, there's a lot of hopium with NVIDIA. So not much to really add there. There's a lot of hopium there. Yeah, he's a wacko, all right, but he's the narcissistic demon. Zim, what a move last week, huh? I think it's the Baltic Dry Sea Index. I think that their pricing power is just so strong. The Baltic Dry Sea Index is moving up. Okay, let's move on. So speaking of Bitcoin weekly chart remains, let's update this, remains in a weekly consolidation, a bull flag setup. So we like Bitcoin, but I have overlaid here Bitcoin versus the US dollar. At current, they're about 50-50 correlated. I didn't want to have the correlation to the US dollar. I wanted it to the S&P 500 for a reason. Okay, so what I want you to take note of, what this insect just stated was that Bitcoin is digital gold. It is not digital gold. It's not. Digital gold is a store of value. Bitcoin is a risk asset. When I see that you have an 86% correlation and at times higher between the S&P 500 and Bitcoin, that is not digital gold. It's not. It's a correlated asset to the S&P 500. Let's take a look at gold. It's probably more tightly correlated now than in the past. Yeah, so right now it's on par with Bitcoin, but as you can see, it spends a lot of its time in the past inversely trading relative to the S&P 500. Now, gold stocks and gold are under accumulation, as are the S&P 500 stocks, especially the industrial names. So it makes sense that they're somewhat correlated. But when things go to hell in a handbasket, the next financial crisis or whatever next bubble there's going to be that bursts, you're going to see gold come down a bit with the S&P 500, but then stabilize where the S&P 500 is going to continue lower. We'll see then whether or not Bitcoin trades with gold to the downside. Does it have the full faith and credit of the people to have money leave equities and go into Bitcoin? That's yet to be seen. We have not seen that yet. You didn't see it back here in 2022. You didn't see it back here in 2020. Oh, that's 2018. Here was 2020. All right, so you didn't see it back then. It trades with risk assets. I still love Bitcoin. I'm all about Bitcoin. Great stuff. You should have a little bit of it. But let's get away from its digital gold. It's not digital gold. All right. Last week was a very quiet week for the equity markets in terms of economic data. That is not going to be true this week. We have a lot of economic data coming out, and it's going to be all about inflation. Now, I'm somewhat optimistic for these reports. And the reason why, I'll give you the reason why I am and the reason why I may be wrong. The reason why I am somewhat optimistic about the CPI report and the PPI report is that you've had agriculture names come off. Some are moving up now, corn, wheat, soybeans, but some prices have come off a bit. You've had energy prices which have contracted, whether you're looking at oil or gasoline, the distillates, they've come off a bit from last month. So we may see that reflected in the PPI. Where might I be wrong? In a couple of areas. One, wage increases. Wages are rising. While I'm glad to hear that from my fellow American. The Wall Street does not like that at all. That's inflationary. The Federal Reserve hates it. Where else might I be wrong? Is that you may see the increase in some ag names, wheat, soybeans, and corn prices reflected in the food portion of the headline CPI report. That won't be reflected in the core CPI report, which is what the Federal Reserve looks at. So also this week, well, Tuesday really begins, PPI and CPI. PPI is the level of inflation at the producer level. Actually, I'm sorry. PPI is on Tuesday, CPI on Wednesday. CPI is the measure of inflation at the consumer level. We also get U.S. retail sales. I'm going to go to a chart of this in a moment. Empire State Manufacturing Survey coming out, business inventories. Thursday, this was a hot number last week. They expected around the same 214, 219,000 initial jobless claims for last week. We actually got 231,000. Building permits, that's a forward-looking indicator for housing, industrial production, capacity utilization, and U.S. leading economic indicators on Friday. And of course, you have your merry band of Fed governors giving their speeches and trying to guide the markets where they want it to go. So a busy week coming up this week. Now, in terms of Federal Reserve expectations for a rate cut, for whatever reason, September is just barely holding on to 60. This was at about 67 on Friday afternoon. It's pulled back. Now, November, roughly 80% probability of an ease. And we're up at around 90% probability of an ease for December. So September, for whatever reason, is coming in a little bit, even after those increased initial jobless claims on Thursday. You still had expectations for a rate cut for September, decline for whatever reason. I'm not sure why. Now, earnings coming out this week. We already spoke about this a little bit. Not much happening on Monday. Unless it's a big bank, you don't usually have big earnings coming out on Mondays. But on Tuesday, Alibaba in the pre-market, Home Depot. It's going to be a big week for retail. Rumble, after the close on Tuesday. A lot of mid caps this week. Cisco Systems after the close on Wednesday. Walmart before the bell on Thursday. JD.com, Baidu. These are all Chinese names. They're coming out on Thursday morning. Watch FXI this week. Under Armour. AMAT after the close on Thursday. So a busy week, but not as busy for the markets. I think that this is going to be a week that economic data, inflation data outshines the earnings reports. Now, going into the new trading week, we have a Schiller PE multiple of 34.18. This is a trailing view of how expensive the market is, and we are pretty expensive. Not at historical highs, but we are at highs not seen since around 2021. Now, in terms of market health, we're going into a week, or we left the week, I should say. We left the week last week with very strong breadth, meaning you had small caps up, mid caps up, large caps up. And Ryan's argument is here that breadth leads price. He could be right. NYSE, advanced decline line, rising. Mid caps, same deal. S&Ps, same deal. Small caps to a lesser extent, however, still net, more advances versus decliners. That's a healthy market. There's a problem. I'm going to go to it in a moment. There's actually a couple of problems. One, seasonality. This is off a trend spider. I want to see what kind of a deal they're offering this week. Because it's a Mother's Day, and let's take a look here. Okay. Usually they give really, really good holiday discounts. If you use the link below and the discount code, you can get a 35% discount code, but I think you can get a better deal. Still use the link. Oh, I don't want to log in because they won't show me the better price. Here we go. Plans and pricing. They changed their website. Plans and pricing. I don't see. Wow, they don't have a sale today. All right, so anyway, 35% discount code below if you want to join up for TrendSpider and get this seasonality tool. Really, really cool. So this is a very short-term negative for the markets. I look at this more optimistically than pessimistically. Seasonality. Let's first take a look at this. We're heading into a week where only 37% of the time has the NASDAQ 100 closed up going back to 2005. So, okay, that's a good sign. We have a down open right now. I heard a couple of alarms go off. I want to come back to this for a moment. Did we turn positive? Because a couple of alerts fired off. Yeah, they all reversed. They're all moving off their highs now. Yeah. Okay. So that descending wedge formation, rear view mirror now, we've broken out. All right. So the way I look at this is that, okay, fine. It's down. It only closes up 37% of the time. But take a look at the following 2 weeks. Up 63% and then up 74%. Tell me this is not a week to be buying equities on a pullback. So that's the way I like to look at this chart here, not as a negative, but as a positive, strategically thinking going out 3 weeks. Now, the other concern I have about the equity markets, this is a chart of the S&P 500. Now, I don't care about price per se. It looks good. We're probably breaking out to all-time highs. There's a problem here. There's no volume, right? There's no volume. Take a look at the trip Qs. No volume. Dow Jones. Volume is a bit better there, but still light on Friday. RUT, IWM, small caps. To be fair, down volume is very light as well, but there's no up volume there either. MDY, these are the mid caps. Very little volume here as well. So we're kind of skating on thin ice here. The other negative for the equity markets is that we had a bit of a rally in the bond market, but that faded by the end of the week. And ultimately, by the end of the week, the 10-year yield closed up. Now, the way I'm viewing this is that this is a continuation breakout pattern. And I suspect that we may break out. Remember that the U.S. bond market is in a secular bear market. So that means that yields are in a secular bull market. So any pullback, we should expect that there be a rally, a breakout. So on yields, anyway, and the inverse for bonds. So if we begin to break out here, and God forbid we take out the highs of the year, that's going to be a major, major problem for the equity market. Now, on the positive side for equities, the yield curve last week pulled back and pulled back measurably. It's been flirting with a breakout for several weeks now, no follow through. And when you take a look at a monthly chart, and granted, it's still very, very early in the month, you're seeing a lot of topping action. Topping tails, shadows, wicks, call them cupcakes, it doesn't matter. We have resistance immediately above on the yield curve monthly view. Now, for all I know, we break through it this month, but at current, it doesn't appear to be a threat. So if you have the yield curve inverting, meaning going lower, widening out 2 years versus 10 years, that just means that equities can move up higher. Now, if we break out, that's a different story. Then we're going to be looking to short the market hand over fist. We're not there yet. Now, I mentioned this earlier about charts that I like to watch. They're kind of off the wall charts, I like to call them, but they're clues. They're clues to the market. And if you have the Dow Jones Containers and Packaging Index not waiting to break out, that's already happened. It's already broken out. Now we are only pressing up higher. We are at highs not seen since 2022. So I got to tell you, I look at this and I say to myself, how can the Federal Reserve raise rates? If packaging and containing is at multi-year highs, you have the Baltic Dry Sea Index with a big move up higher in the month, implying that you have inflation in shipping, there's demand there, well, that would kind of indicate that you have some growth. And you're going to cut rates into a supposedly four-handle GDP, according to the Atlanta Federal Reserve? I don't know about that. I question that. And if they do it, they're letting loose the dogs of inflation on this economy. You think it's been bad now? Wait until they cut rates into a 4.2% GDP. I got to be honest with you. I'm extremely torn on this market. I think that the charts look great. I think in all probability we are heading up higher. But man, there is going to be a day of reckoning that comes, and it's probably going to manifest itself in this chart here. These two charts, both ripping up higher. 10-year yield, multi-year breakout, yield curve breaking out and uninverting. Once we uninvert and you have the 10-year ripping through the ceiling, get out of stocks. Consult your financial advisor, but get out of stocks. Okay. Now, I mentioned last week that the unemployment rate surprised a lot of people. And you can see here, we don't rely upon 1 week's worth of data here, never. But we do watch the trend. And you can see here that you have the unemployment rate, which ticked up last week as measured on this chart here. It always precedes a recession. And the Dow is kind of extended now. If we do get a breakout, you should expect to see not just the Dow Jones. I don't know why they overlaid the Dow Jones here. I think you could overlay the S&P 500 if you want, and it's going to look the same way. Probably the S&P, in particular the Trip Qs, would probably be a better barometer to put up here relative to the Dow Jones. But the point should be taken that when unemployment begins to break out, equities do not do well. They do not do well. Charts look great, but common sense with what is behind it makes you scratch your head. Yeah, you don't know what they're thinking. It's kind of scary. When you have puppet masters like this guy out there pulling strings, it makes me very, very, very worried. Very, very worried. So here is U.S. retail sales. Don't forget, retail sales comes out this week. And U.S. retail sales, spot 7.7%. That's an increase year over year. Folks, retail sales and food service sales have flatlined. And that generally is what happens just prior to recession. So is the reason why we're seeing a near 90% probability of a cut in December an indication of what these charts are showing? Retail sales stalled. Unemployment rising. Wage growth rising. That's inflationary. And what's the other one? It'll come to me. Credit card debt. Credit card debt. Very, very high. And savings gone. All the stimmy money from COVID, gone. And here's who's spending. The top 20% of incomes now account for a massive 40% of consumer spending in the U.S. Meanwhile, the bottom 20% of consumers now account for just 9% of consumer spending. Even if you combine the bottom 40% in the U.S., they account for just 22% of consumer spending compared to 61% for the top 40%. With inflation above 3% for 37 straight months, the wealth gap has widened. Why? Why does that happen? The wealthy have assets. Asset prices have gone up. The lower 20% generally don't have assets. So they're their wages may be going up incrementally, but so is unemployment. So the lower 20% is they're in dire straits right now with inflation on the rise and only looking to go higher. Those in the higher income quartiles have outpaced inflation through real estate and stock prices. Everyone else has been left behind. Very true. And here's the government playing with the inflation numbers. Here's how the government fakes CPI data. Just remove stuff that is increasing in prices. Coffee was removed. I was unaware of this until today. Coffee prices are going through the roof. Coffee was removed as of April the 30th, 2024. Why? Coffee has increased 78% since September of 2023. They've taken it out of the CPI report. So that report for next week, PPI, CPI, that included coffee for last month, or I should say for March, will not be reported for last month. Yet, those prices have still gone up. All right, so stocks that we like going into the new trading week. Let's talk about opportunity here. Broadcom, looking really, really good. Love this chart. It looks as though we are breaking out. I also like not Taiwan Semi. I like Texas Instruments for a short. This is going to sound very odd. Hang out with me for a moment. Let's go to, where's my Bitcoin? That's not the chart. I want my squeeze. Let's bring up Texas Instruments. You can see on a daily time frame, this is very, very overbought. So I'm probably going to sell calls here this week for short-term scalp to the short side. The reason why I don't want to stay short for very long is it the monthly chart or the weekly chart? Monthly chart. Look at this breakout on Texas Instruments. That is a monster of a breakout. Bollinger Band squeeze. This is going up higher. I think it's going to pull back. That pullback is going to get bought. So if you're going to short this, you're going to try to scalp it, fine. But be careful. Don't stay around too long. This is going up. MU. Yeah, it's looking, well, it's already broken out. This is a little bit long in the tooth now for me. I think Texas Instrument daily chart, a bit overbought. On any pullback, I'd be a buyer. Let's do some chart requests, and we will call it a night. Go to the members area. Ticker Cloud. Okay, I have a couple of stocks that I want to go over. I have so many Post-it notes. Here we go. Oh, I wanted to go over the VIX. We'll come back to this. This is another concern in the market right now. Volatility is in a very, very unsustainable downtrend. This is a brutal, brutal beating that the VIX has taken. We are inside of a descending downtrend channel. This is going to get probably going to pull back lower, and then we're going to rip up higher. So beware. At some point in time, probably this week, especially with seasonality being what it is, we are going to get a pullback in this market and a breakout on the volatility index. So be forewarned. This is unsustainable. It doesn't mean it can't rally and then roll back over again, but we are going to get a rip. It's going to hurt a lot of people. So be careful of buying this week at the highs of the day or early in the day. All right, now let's go back to my charts. I have a few out here. One that I spoke about last week, SPT. They're logging me out here. Let's try that again. SPT, daily view. I wanted to buy this, but it never reached our price target last week. Now, what it did do is that they did have a short covering rally. I think this fails. I think this presses lower. RSI is still oversold. We are down at let's call it a 17 handle. It was down at about 10. But I think this breaks, and I'd be looking for an entry point probably around that $25 per share range. So if it breaks out, I will not chase it. But if it does pull back, we'll be looking to be buyers of SPT. Other names that are on our extreme oversold list, EPAM. This thing got annihilated. I haven't done the analysis of where support is here, but we're pretty close. RSI is at around 18. But we're going to look for short-term swing trade opportunities. If you're interested in these extreme oversold stocks, I have an infographic below on how to trade these. So please look at that first. It's free. What else? TripAdvisor, was it? Yeah. This one's trading with a below 19 handle. I wouldn't be a buyer of any of these yet. Not quite yet. We're not there yet. But they're on our watch list for the new trading week. Now, AVGO, we spoke about already. I'm really liking this trade. We broke out on the day on Friday. We'll look for a retest of support. And on any pullback, I'd be a buyer. AVGO. SNPS. Synopsis. It's not about the daily chart. It's more about the longer term chart. A beautiful, beautiful setup here. I don't even know what they do. Nice consolidation. If this thing breaks out with the other big industrial names, we're going up higher. And again, I'm not even sure if they're an industrial. I have to check it out, but I believe they are in that arena. Let's take a look. IBD. No, more technology. Computer software and design. They're reporting on the 22nd, to be fair. Be advised. Good fundies here. A little bit expensive, but it looks like a good-looking stock. Booking Holdings. That's breaking out on a monthly time frame. A lot of good names out there looking very strong. Monster. I forgot what I liked about this. This could be a squeeze setup here. Good volume. What else do we have? That's it. That's it for now. I have Home Depot on my list along with Walmart, but they report this week. No sense in going over them. Back to SNPS. Now I remember what else I liked about that chart. you have a beautiful squeeze setting up, not just on a monthly chart. Also on a daily chart. Yeah, it's beginning to fire off. We need a breakout here on Synopsys, but I like this stock. Don't forget earnings coming out soon on the 22nd. Okay, let's do some chart requests and call it a night. We have BHP Bulletin. Let's use this one. Let's go through the. Now, I was in this one. I got stopped out. I want to buy back in. I can't until it breaks out. Or it pulls back to support at around $55 a share. So I'm a buyer on a breakout. Not until then. I already got stopped out. I'm in no hurry to get back in. We took a small loss, but I don't want to keep taking small losses because it's silly. You got to have a reason of why you want to get back in. And we'll keep this active for a while. I do like the company. Their products are very, very hot right now. Let's set up an alert down here. It's not going to let me. Forget it. All right. So BHP looking interesting. No breakout yet. Bearish reversal bar on Friday. I'm just a watcher here. Nothing to do. Maybe you want to sell puts. Other than that, I wouldn't do anything with BHP. Rio Tinto. I haven't looked at the chart in many years. Rio Tinto. Firming up better than BHP. Remember, BHP has that arbitrage issue going on right now. So they're trying to buy out another company, and that's a problem for visibility for the analysts. They can't get traction. Rio apparently doesn't have that issue right now, and the share price is looking a lot more favorable. Now, we did close out the week at resistance, but we had broken out above quarterly resistance here in dashed line. This is a monthly chart, but I have quarterly support and resistance levels on here as well. So we broke out, did a retest this month, followed through. We're at resistance at current. So right now, I'm not sold on buying it. I'm weekly chart, still not sold on buying it here. It's got better momentum than BHP. Bearish reversal bar on Friday. I would wait for a retrace back down to VWAP or one of these support levels, maybe at around $68 a share. And I would look at that price point for an entry. We are very extended on stochastics. We've come a long way on Rio Tinto. So just be forewarned. I think that we pull back here. Flute. They report soon. Thanks, Franklin. You're very welcome. Thanks for being here. And yep, see you in the morning. Happy Mother's Day to everybody. Yep, absolutely. Thanks, Franklin. Have a great night, Mike. Thank you for being here. And we have Talon, Nugget, okay. Jody Marvel, Flute. Nice. Flutter Entertainment. Nice monthly chart here. A bit of a reversal bar. This wants to go up. You got resistance above, but good volume. So we can get through that. So I'm bullish on this stock. Really good week last week. Daily chart. This is going up higher. This wants to go up. So I'm a buyer here of Flute. Looks very, very good. Nugget. Nugget is a leveraged product. Gold mining stock, large cap gold mining stocks. Monthly chart. We remain in a very, very long base on Nugget. Here's your lower band of support at around $24.50 per share, $25 a share. I think this goes up higher, longer term. Now, I know because we own it, on Friday we had a pretty bearish day, but on the week we broke out. So it doesn't mean we can't do a retest of around $40 a share. Daily chart, and we're probably going to. We had a bearish reversal bar on Friday. I think we pull back down, retest that $40 per share mark. If the dollar weakens up, I'm a buyer at that $40 per share mark. If the dollar remains strong, I'm not going to add. HPE, Hewlett Packard. Struggling with a breakout. I'm not a buyer here yet. Not until we close out the month above $17.25 per share. The daily chart is looking promising, though. We broke out on Friday, so Hewlett it's improving measurably. SoFi. In a descending wedge formation. If you get weaker yields and the small caps run, this goes up with them. If you don't get weaker yields, this is going to go nowhere along with the rest of the small cap names. Simple as that. Weak yields, good for the small caps. Strong yields, very, very bad. Watch the 10-year yield with this one. We'll leave it off with Marvel, MRVL. Monthly chart. Love the setup here. We're wedging out. RSI, higher lows. But it's early in the month. We broke out. We broke out on Marvel weekly chart. But we are still in a RSI downtrend, which may have come to an end. Hold on. I did that sloppy. I didn't expect what I just saw. Yeah, we broke out. So we have a breakout on price. We have a breakout on RSI. Stokes are hooking up. Buy. I'm liking Marvell. Daily chart. We broke out of a descending downtrend channel. Looks like we're going up on MRVL. Looking very, very good. Folks, thanks for being here. Like, subscribe. You know the deal. Don't forget TrendSpider. I had a 35% discount code below. If you want my infographic on my extreme oversold stocks, that's linked below. That's free. And everybody have an awesome and profitable trading week. Happy Mother's Day. Be well.